Hello students, welcome to the video 4 of the add-on course Contemporary Practices in Management, second module part B, Accounting and Auditing. Students, in the previous videos we have seen what is an accounting and what is an auditing and the importances of accounting and auditing as well. And in the previous video we have seen what are the differences between accounting and auditing, and in certain cases accounting and auditing are similar and they play equal role of responsibility is being taken by both accountant and auditor. So we have seen the similarities and the relationship between the accounting and auditing also. In this particular unit we will be seeing different types of audit. As you all know, audit means to verify. Now the books of accounts are verified, and for some companies it is compulsory and for some other companies it is not compulsory, and few may do it on optional basis. Okay, so audit itself is nothing but the verification of books of accounts, and this verification can happen according to the nature of the business, according to the type of the business, all that. So generally auditing is classified in under five different types. One is under the organizational structure basis, that means on the basis of the organizational structure, then on the basis of time, on the basis of scope of auditing, then on the basis of objective of auditing, and on the basis of some other relation, that is maybe some other types of the auditing. So let us see the different types of audit one by one. First one is the organizational structure. On that particular basis, the types of audit can be seen as statutory audit, government audit, and non-statutory audit. Statutory means something which is compulsory according to statute or according to law. So statutory audit is compulsory audit which is prescribed under statute or law. And appointments of auditors, the removal of auditors, remuneration that we pay to the auditors, rights, duties, and liabilities of the auditors under statutory audit are governed as per the provisions of the respective law which is applicable to the organization. For example, if the company is registered under Companies Act of 1956, which is recently amended as Companies Act of 2013, then all the provisions and regulations of that particular act will be applicable to that particular company. If the bank which is registered under Banking Companies Regulation Act of 1949, then all the regulations of Banking Act of 1949 will be applicable to that particular bank. If the insurance company is registered under Insurance Act of 1938, then all the regulations of that particular act will be applicable to that particular insurance company. So like this, the provisions of the respective law will be applicable to the organization, and the scope of the audit work and all other terms are as laid down by the law that they follow, and it can be conducted only by a qualified chartered accountant who has cleared all the exams as per ICAI, that is the Institute of Chartered Accountant of India. This is the regulatory body in India again. So statutory audit is conducted after the preparation of final accounts, and the statutory auditor has to report whether the balance sheet and the profit and loss account are drawn upon conformity with law and whether they show the true and fair view, which means the objective of auditing is executed here. See, for any type of audit, the objective is exhibition of true and fair view of the final accounts or financial statements, whether the profit and loss that the company is revealing through an accountant is true or not. That is what we check in auditing, and the statutory auditor has to submit report to the shareholder, and his remuneration is always fixed by the shareholder, and the concerns and the corresponding acts are like Companies Act, which is amended recently. Earlier it was 1956, now it is 2013. The financial audit has to be done according to section 227, and the special audit has to be done according to section 233, and the cost audit has to be done according to section 233b. Okay, and so on. So this is about the statutory audit. So in the name of that particular type of audit, we find the answer. That is, statutory audit is an audit which is compulsory according to statute or compulsory according to law. Okay, then the second type of audit under organizational structure base is the government audit. So government audit is a control measure for public accounting of government funds. See, this particular audit covers the verification of all the expenditure and receipts which are done by the executive, and audit of commercial accounts which are maintained by the public enterprises. So public enterprises, as you all know, are classified under three categories department undertaking. That is, statutory corporations financed by government, and government companies set up under the Companies Act of 1956. So in India, the Accounts and Audit Department of Government of India, which is headed by the Auditor General of India. Okay, they carry the audit work, and the CAG's duties have been specified by the Comptroller and Auditor General Act of 1971. So as the name itself suggests, government audit is the audit of all the expenditure and receipts which are done by the executive, and the audit of commercial accounts which are maintained by the public enterprises. That is about the government audit. In simple, it is the audit of all the government companies. Then non-statutory or private audit. Non-statutory, as the name itself suggests, there is uh, no statute which governs this particular type of audit. That means this is not compulsory. Okay, so any private companies can voluntarily do the auditing. See, it is an option for them, for partnership firm, for sole trading concerns and all. It is not compulsory that they get the auditing done every year. Okay, it is left to them. So this particular audit is also called as voluntary audit. That means the management can decide whether to get the books of accounts audited or not. Okay, so here voluntary audit is the audit which is not compulsory under any particular law, and it is carried at the discretion of the proprietor. Terms and conditions of the audit and the terms and conditions of the audit are determined as per the agreement between the auditor and the proprietor. For example, financial audit of a sole trader and the partnership firm. As I told, it is not compulsory for any sole trader or sole proprietorship concerns, and not even compulsory for any partnership firms. It is left to them whether to do the auditing of their books of accounts or not. This particular type of audit also covers non-financial audit, such as internal audit, management audit, and operational audit. So here, as I have mentioned in the types of private audit, sole proprietorship, partnership firm, and individuals and non-profit organizations, for them it is not compulsory to get the books of accounts audited. That is why they are all called as private audit or non-statutory audit. I hope you all are clear with the types of audit on the basis of organizational structure. Then let us see the next classification of auditing on the basis of the scope of auditing. Scope means the extent to which it is applicable. So we see three types of auditing under the that is on the basis of scope of auditing, we get to see three different types of audits. One is the complete audit, partial audit, and detailed audit. So complete audit, it is a type of audit wherein the auditor is required to check each and every transaction recorded in the books of accounts. As the name itself suggests, complete books of accounts are to be verified. That means each and every transaction is to be considered for verification, and the auditor has to examine each and every voucher and document or correspondence relating to the transaction. And this particular audit is not possible for large sized organizations, because the number of transactions happening in the large sized organizations are more. That is why we cannot have it. This particular type of audit cannot be done for large sized or any particular organization that is functioning on large scale. We cannot have complete audit. Then partial audit, as the name itself suggests, partial, that means a portion of complete or full financial statements. So in this particular type of audit, the auditor is not required to examine all the books of accounts, only a part of accounts or some transactions as desired by the clients may be scrutinized. So the auditor has to state the area which is covered by the audit. So scope itself is nothing but the area to which it is extended, or the extent to which it is applicable. Complete audit means that even the client asks us to do the complete audit, we have to verify each and every transaction and we have to vouch it with the supporting document. But in partial audit, it can be done according to the requirement or desire of the client. When the client asks us to just verify only the profit and loss account, then we will just go through only the profit and loss account, or audit only purchases of the organization. So something like this, wherein we do it according to the desire of the client, that is called as partial audit. And this type of audit cannot be followed in case of statutory audit, because in statutory audit, again, each and every transaction has to be verified according to the respective law under which the particular company is registered. Okay, so that is why this cannot be held for any companies which follow statutory audit, and it may be followed in case of statutory audit, that is, and the this one is actually not convenient when the audit is legally required. Okay, so we don't have to rely on the partial audited reports. Then the next one is detailed audit. So detailed audit means, under detailed audit, few business transactions will be examined in detail by an auditor. So according to Spicer and Pegler, they both have defined this detailed audit as an audit which starts with books of prime entry and ends with balance sheet. That means the whole accounting cycle is verified. See, we all know that accounting cycle starts with recording of transactions, that is books of primary entry, that is the journal, and it ends at the preparation of financial statements, that is the balance sheet. So each and every account is being verified, which is called as detailed audit, and the checking sequence is arranged uh, uh, in order to understand well how each and every transaction is being recorded. So it starts from recording of transactions in the primary book and ends with the preparation of balance sheet in order to know the financial position. So the purpose for the detailed audit, certain transactions are traced through various stages from beginning to their end with the help of available evidences, and this technique of examination is also called as audit in depth, because the audit is happening in detail. Then the next type of audit that we get to see is from the point view of time, that is based on the time. We get to see four different types of audit, that is continuous audit, or it is also called as running audit, then final audit, interim audit, and balance sheet audit. Now, on the basis of time, that means in a year how many times the audit can be done, when the audit can be done. So all these are considered as base for this particular classification, wherein continuous audit is an audit wherein one auditor is constantly that is either regularly or irregularly under each interval he is engaged in checking the accounts during the period, because you all know that audit means an audit at regular intervals throughout the accounting year, and generally the audit work begins after the accounting year is over. But in case of a continuous audit, the work begins the accounting year itself. That means in the beginning itself they will start verifying the books of accounts, and on a regular basis it will be done. So continuous audit is necessary where the volume of transaction is very large and complex, so that you need not struggle at the end. Towards the end you need not struggle for recording any transaction or verifying any transaction. As and when the transaction occurs, it is recorded in the books of accounts, and immediately the verification is being done. And it is also necessary where the management requires monthly, quarterly audited statements of accounts, or the statement of accounts are required immediately after the accounting year, and where the system of internal control and internal check is very weak. And sometimes this continuous audit becomes necessary for the self survival against cutthroat business competition. And sometimes the business wants to declare interim dividend, so at that time also continuous audit is very much helpful. So continuous audit is helpful in quick preparation of final accounts and providing early dividends to the shareholders and up to date accounts for the banks and investors, and to have a check on employees. Continuous audit is helpful, and this is one of the important types of audit which prevents the errors and frauds. Then this is an audit which is familiar with the client's business. That means when everyday books of accounts are verified, you become familiar with that particular client's business. And thorough audit, because the auditor has more time at his disposal to do a thorough checking of all the transactions. This reduces the risk of missing any material items, and utilization of audit staff is very much possible under this continuous audit, wherein audit staff can be kept busy throughout the year and audit work can be evenly distributed to avoid any overwork after the year end. That means the work complication for an external auditor is reduced with the help of continuous audit. But I must say that continuous audit is a bit expensive when compared, because only a large organization can opt for continuous audit, because unless you make any payment to any particular person, he will not be ready to do the audit of your company's transaction. So it is a bit expensive, and the dislocation of clients work is also possible with this continuous audit. And the errors and frauds in books are already checked at the beginning itself, so the external auditor will not have any work at all, which is actually a disadvantage, because we are paying the external auditor also for doing his work. So if we do the checking on day-to-day basis, then the work of the auditor completely gets reduced. And the conflict between audit and account staff exists with the continuous audit, because as and when the accountant is done with his recording of transactions, then the auditors will start questioning them and asking them for certain documentary evidences, so there may be certain conflicts arising. This is about the continuous audit. Then the second type of audit based on time is the final audit, which is also called as annual audit or periodical audit. So this is a type of audit generally which starts after the completion aspect more than depth aspect of audit. So here if you have to understand what final audit is, This is one of the economical and inexpensive type of an audit, where the audit spends normal time on the audit work, and the audit fees is also normal, and final audit is very inexpensive, I could say, because even a small organization such as a sole trader or a firm can opt for final audit to obtain the advantages of an independent financial audit. And this is an audit done at a stretch without any particular gaps, because our audit is carried out efficiently and all queries are solved immediately. The work is done continuously and not in installments. That means like in continuous, what happens today, if they do some auditing, again in the next week they will have to do, so continuously on a regular basis they will be doing the auditing work. But in final audit it is not like that. If they decide to do it once in a year, only once in a year the audit will happen. So the audit planning and program are very simple, and very less errors and frauds will be found here, because no employee can change any figures in the audited books. So the account staff is not disturbed any time during the accounting year here. Otherwise, in continuous audit, what happens? The accounting staffs are always disturbed by the auditors, because they have to verify the books of accounts. Then the next type of audit is the interim audit. Okay, before understanding what an interim audit is, let us see the differences between the continuous audit and final audit. So continuous audit is done continuously throughout the year, wherein annual audit or final audit is done at the end of the year. Now continuous audit is suitable for big firms, and periodic audit is suitable for small businesses. Then detailed checking is possible in continuous audit, but in final audit, detailed checking is not at all possible. And there will be more moral check on the staff in the continuous audit, but there is no such moral check on the staff in the periodic audit. And the audited final accounts can be submitted just after the close of the financial year, but in the periodic audit it is not possible. And the continuous audit is comparatively expensive, wherein final audit is inexpensive, I would say. So let's move on to see what an interim audit is. So interim audit is an audit which happens between two financial years. That means in the mid of the year, the auditing will happen. Any audit which is conducted in between two annual audits is called as interim audit. That means it is the audit which is happening in between two different years. Then also, we must know that it is conducted to find out the interim profit and know the financial position at the end of the part of the accounting year. That means interim profit means in between two financial years, what is our financial position, what is the profit that we have earned. So that is the main intention of doing the interim audit. So when interim audit is conducted, the quarterly results can be obtained. Take for example, if there is any public limited company which is listed on stock exchange, it has to declare their quarterly results. Okay, so in order to declare quarterly results, they have to get the books of accounts audited first. Unless they do the auditing, they cannot declare any results also. So it is preferable, though it is not compulsory to declare any results, interim audit has to be done. Then in order to declare any interim dividend, then interim audit has to be done. Interim dividend is that portion of profit that the company issues to the shareholders in between two different financial years. Then in case of sole proprietorship firm, interim audit becomes necessary on admission, retirement and death of a partner, and dissolution or winding up of partnership firm, sale of firm to a company, valuation of goodwill, and in such cases interim audit has to be done. And in case of a proprietor, interim audit may be conducted when the business is proposed to be sold, or to fix the purchase purchase consideration, the interim audit will be held. Now, in case of partnership firm, interim audit becomes necessary on admission, retirement, death, as I said. Okay, so that is about the internal audit. Then we will see what is balance sheet audit. Balance sheet audit is the one which is considered as the verification of the items appearing in the balance sheet, and this one includes verification and valuation of assets and liabilities appearing in the balance sheet. We all know that balance sheet is a financial statement which helps us in recording the current value of all the assets and liabilities that are under the possession of the business. So here it is important to know the applicability of the balance sheet audit. So balance sheet audits are not conducted in all the cases, because these audits are conducted only in case of very large organizations or banks, in circumstances like when the internal control system is very strong, then when the whole transaction is so large and that an in-depth checking is impossible, at that time we can have this balance sheet audit. And the concern has its own internal audit department, so the statutory auditor need to duplicate his work. Then the account staff is highly qualified, the management is professional, and accounts are computerized. So these are the certain applicabilities of this balance sheet audit in general. So here it is important that we understand the importance of interim audit in supplying quarterly results, in declaring interim dividends, in quick preparation of final accounts, then up to date accounts for banks or investors, then have a proper check on employees, then to prevent the errors and frauds, and thorough final audit and utilization of audit staff. So this is about the different types of audit on the basis of time. Now let us see what are the different types of audit on the basis of objective of that particular audit. So you all must be knowing what a cost is. Cost is amount that is being incurred in order to produce a product. So cost accounting is nothing but recording the transactions in order to calculate or ascertain the cost unit of a product or total cost of the products. So here when you verify the cost accounting books, then it becomes a cost audit. Audit means verifying the books of accounts. Cost audit means verifying the books of accounts. That is, books of accounts is nothing but accounting. Verifying cost accounting is called as cost audit, and it is a type of audit in which verification of cost records which is maintained by the organization happens. Then the next one is management audit. So management audit involves the examination of all the plans, policies, procedures, methods, strategies, and evaluation of the performances of management with a view to improve organizational effectiveness. So in order to improve the organizational effectiveness, management audit will be done. That means you try to understand the different functions of auditing, and the plans and procedures are all understood in order to make this particular autonomous section successful. So management audit is the one which is very important in terms of taking any managerial decisions. Then internal audit. So, internal audit, as the name itself suggests, this is an audit which is done by an internal employee of an organization. So, internal auditing is continuous critical review of financial and other operating activities by the staff of the auditors and functioning as full time salaried employees, and those who work as these particular employees, internal employees, they can be the employees or they can be the team members of the auditor, main auditor. Then according to the Institute of Chartered Accountant of India, internal audit is a separate component of internal control which is established in order to determine whether other internal controls are well designed and properly operated. So this is about the internal audit. Then we come across the social audit. So what is social audit? Social audit is a recent development in the field of auditing, which is based on the modern concept of social responsibility of business. You all must be knowing social responsibility of building is social responsibility of any business organization is very much important to be discharged every time. Okay, so in the field of auditing, this social responsibility of business plays a very important role, and it examines what extent the business is discharging its social responsibilities. If you want to know the main responsibilities of uh, a business with respect to customers is providing proper quality goods, then charging reasonable amount, all that. Then to the other competitors, it is important that we maintain our own dignity though the other person is trying to stab us. Okay, so here discharge of social responsibilities is very important for each and every uh, person who is connected with the books of accounts of the organization, because we all would like to get to know where the amount is from. So this is the social audit. Then apart from these, we have the other types of audit, which is occasional audit, cash audit, and operational audit. So occasional audit is carried out according to occasional need of the business of the client, and it is done at the specific desire of the owners of the business, where the audit is legally not compulsory, and the auditor will conduct the audit according to the terms and references, and his report will mention the terms of reference as per the letter he has received. So this is called as occasional audit. So occasional audit is the one which is done for certain occasion. Then cash audit. So it is also considered as a partial audit, or audit which is not very complete, because this in this type of audit the auditor examines only the cash transaction. He examines cash receipts and cash payments, but then it is important that the auditor notes down that the receipts and payments may be capital or revenue in nature, and the cash transactions are checked with the help of receipts and vouchers and other evidences. Then now let us talk about the operational or performance audit. So operational audit, as the name itself suggests, it is an audit which is conducted to see that the business operations are improved in future or not. And important thing about operational audit or performance audit is that it goes beyond the financial audit, and it is conducted for the following purposes, like improving the profitability, guiding the management in achievement of social and organizational objectives, to examine the efficiency of the management in conducting various operations, to evaluate the management policies and procedures, to advise the management on business operations. So here there are certain important points that we have to record. First one is to know about the scope of duties, wherein the auditor should get written and detailed instruction from the client regarding the scope of work that he has to execute. And um, the next factor which is considered for the new audit is nature of business. Now the auditor should make himself fully familiar and the basic nature of business, because in this case what happens, the business of technical nature, the auditor should be clear with the technical nature of the transactions. So the knowledge will help the auditor to work efficiently. And then knowledge which is about internal control and internal check or internal audit. So the auditor should examine in detail the system of efficiency or efficacy, uh, and if it is a repeat audit, the auditor should obtain the previous year's audited accounts and a complete list of all the books of accounts in use, and auditor's report is required if any. And then knowledge about internal control and internal audit. So it is important that the auditor should examine in detail the systematic check which is done as internal check and internal audit. And because only on the basis of the reliability and efficiency of these control measures, the auditor can decide upon the sample verification or detailed checking. And then the next factor would be the study of the important documents, wherein the auditor should study the memorandum of association, articles of association, reports of directions and shareholders meetings, then principally or similarly partnership deed and the trust deed, which will give the important information about the partnership firms and trusts. Then the next factor would be the organizational structure, wherein the organizational structure of the business unit is to be studied in detail, and the organizational chart is helpful to know about the authority and responsibility of different individuals. Then the information about the principal officials. See, the auditor should obtain the names and designation of the principal officers of the firm, and if possible, please meet them in person. That is what information about the principal officials according to the auditing is. And then uh, where an auditor which was appointed in the place of another auditor, the new auditor so appointed has to inquire about the names so as to change of auditor. Now it is important that the change of auditors is possible only when the auditors are appointed in place of another place, and that particular person is and then previous year's audited balance sheet should be considered, wherein the auditor should obtain the previous year's audited balance sheet if any, and should see that the accounts during the current year have been opened with those balances that appeared in the previous balance sheet. So this is what we do when we have the previous year closing stock, we consider it as opening stock for the current year. The same way we will have to do it in the auditing also. And also to know about the policy of the board of directors, the auditor should try to be familiar with the policy of the board of directors in delegating the authority to the management and study of efficiency of the management controlling the staff. So this is about the different types of audit that we come across. So in general we have audit based on five different classifications, and the basis is, first one is the organization structure, second one is the scope of auditing, third one is the time of auditing, fifth one is the object of auditing, fourth one is the based on the object, and the fifth one is the other types of audit. And I hope it is all clear with all of you. And see here, in order to prepare any of these different types of audit report, no, the auditor has to be prepared before beginning the audit work. So what he has to do is, he has to work on the division of work first, and then audit program has to be prepared, and then audit files will be kept ready, then audit notebooks will be taken out for presentation, and audit working papers are also important. So this is about the different types of audit, and I hope you all are clear with it. Thank you all. See you in the next video, and in the next video we will be seeing another topic about the audit. See you all. Bye. And also I want to mention that in the next video we will be seeing the internal control and internal check procedure that happens in an organization. What is the role of an auditor in internal control and internal check? That is the one we are going to see in the next video that I'm going to prepare, that is in the video 5. Till then, please take care.